Hey guys, it's Crossroads here with a special guest, my first guest, Tanner. How you doing?
I'm doing great. I'm so happy you have your own channel and very happy to be a part of it. I think first guest is what you said.
First guest.
Um, so yeah, let's talk some fintech stocks.
Yeah, we're going to go over today talking about earnings for three fintechs that had earnings this week. So we're at SoFi, Robinhood, and PayPal. So just to kind of start off, these are high level thoughts, so not like into the nitty gritty. I might do a information on one of these and later at a later date. But as far as your overall thoughts, Tanner, which do you think was the best of these, and then which was the worst?
Contrary to what the stocks have done during these earnings results, I actually think SoFi had the best results. Um, it's a toss up, honestly. I'd probably put it equally PayPal and Robinhood. I definitely was not as disappointed with Robinhood's earnings as Wall Street was.
Right.
And I think that it'll continue to climb back up as the quarter goes on. I think that we did see a lot of selling pressure similarly to what we did last time, except it was just coupled with a slight miss. But Robinhood is doing Robinhood things, and I'm very excited with their results as well. Uh, PayPal's trucking along and has a lot of potential, turnaround plays. But yeah, it's a different story than the other two. I find the other two are like really taking market share, and PayPal's mission is to retain market share. So it's a little bit different looking at them.
Yeah, different phases for all these companies too, and there's a tiny bit of overlap with each, some more than others, but there's a lot of room in this space for multiple fintechs to survive. And you got to hate when it just like seems like all the big fintechs are lined up right there on the week, or especially the same day. So,
Yeah.
um, so as far as let's start with SoFi then, since I actually agree with you. Last quarter, I think that you guys were more pleased with SoFi than I was. I thought PayPal's earnings and Robinhood earnings were phenomenal and much better than SoFi. It's reversed for me this time. I think that SoFi this quarter, and it's not just about the quarter, but this quarter they absolutely killed it. So just give me your high level thoughts as far as like what stood out to you in the quarter for SoFi, and then we'll talk about what concerns you might see there too.
Um, I mean, the first thing that comes to mind whenever I think of what stood out was originations for their lending. So they were supposed to be slowing down this year. I think we had kind of all anticipated that that wasn't going to be the case. Seeing the proof there now is very exciting. And this brand new product of the loan platform business is by far the best news that I've seen at SoFi since probably I've been covering it. Um, so for people that don't know, SoFi is now originating loans for other businesses using their capital, using SoFi's underwriting, and SoFi's members. They will give out loans to other people. So this isn't selling loans. This is like taking money out of someone else's wallet and paying for those loans right out the gate. So there's never any balance sheet risk or anything along those lines. They've already scaled it in their first quarter to as large as what Upstart is doing. That's
Yeah,
unbelievable.
it is. Yeah, and they've had great success, and it's apparent that their product there's a lot of appetite for, and I think that'll continue, especially as rates continue to fall. But no, this can grow into a massive business with no risk. Like that's the best thing about it is if they hold loans, or even if they're selling loans, if the fair value actually dips, then all of a sudden they have some balance sheet risk there. But with this, they're just the middleman. They're basically have a toll booth, and they get some money for no risk on their end. So it's great.
If I could talk a little bit more on it, I think one of the
Sure.
things that gives Upstart such a premium versus how much revenue that they're actually producing is the idea that they are not taking on balance sheet risk for what they're doing, right? So they underwrite loans for other institutions and have this AI model that essentially can try to underwrite loans better than FICO scores. But
Right.
I in reality, they are taking on balance sheet risk because institutions don't feel like what Upstart is doing is actually working. So Upstart goes to them and they say, hey, we'll help fund a percentage of these loans. And then if it goes wrong, we'll also help cover a percentage of the losses. And so it's actually not as good as what people originally signed up for the Upstart thesis. And SoFi's is achieving that thesis. They are not doing loss share agreements. They're not doing finance commitments. It was as clean as what Upstart used to be. And yet they're already scaled up to $1 billion in originations. And if you look deep enough into the quarter, they said they're going to do more than $6 billion in 2025.
Yeah,
So yeah,
it's a great model, and there's really not any downside there. I mean, there just isn't. Like, if they're not able to do that many originations, fine. You know, they've guided for that, but usually they're conservative. Yeah, it's a whole different animal versus. Well, the other aspect too is they're not capital constrained. Because they're not originating this. That was one of the bear arguments, from a year ago for SoFi was, hey, they're going to get capital constrained. They'll be limited on what they can lend out. Right now, they're not in that position at all for their own loans, but this is something that they're never constrained by. So it's fantastic.
exactly. They said theoretically we can match the loan demand from our members depending on how many partners that they actually get. So if they get $10 billion worth of loan originations per quarter, in terms of applications that they could write, 700 plus, high FICO, high earnings, everything, SoFi can't do that. So they have to turn away people that they would otherwise write a loan for. Now they can write a loan for them and do their, fill their own balance sheet up. And that's not even inclusive of the fact that, like, the money that they're making on these loans, I had anticipated to probably be at 3%, and it's looking closer to be more around 6%. So it's about double what I thought they were making on these loans.
That's actually astounding. I didn't realize. I knew it was higher. I had not broken down the numbers, but that's phenomenal. So,
They
why do you
they
think that they're getting such a premium?
um I mean aside from their underwriting models, I can't think of too much more. They have a track record of success in underwriting in this credit box, so they get a premium there. But yeah, the math is pretty simple. So they said it's about $1 billion. Maybe we'll get some more specific numbers whenever the 10Q drops. But they said about $1 billion, and then they said they made 61 million off of this $1 billion. So 56 million from the actual fees, and then an additional 5.5 million from servicing fees.
Yeah,
That's a 6.1% return.
and lending definitely stood out. I think that's part of the reason too why SoFi. We did see the typical SoFi sell-off. Stock is doing and holding up well in double digits. It looks like next time I'm able to come on the SoFi Weekly, it'll be light mode Roy again. We might hold above 10 for a long time. It may not ever go back. We don't know. But was there any concerns for you? Any weaknesses in the earnings for SoFi?
I mean, yeah, there were a couple weaknesses, but even as we went through, like whenever we originally looked at the numbers, I had so many more weaknesses in my head than I do now getting a better look at the numbers. So first off, deposits didn't seem to have grown as fast as I'd wanted them to. 2.4 billion. I was expecting closer to 2.9. But then you realize that they actually came in at 2.8 and they lowered their CD deposits by 400 million, meaning they lowered a higher cost of funding source and brought in more customer deposits, which they have more flexibility. As we just saw, they just lowered their APYs on their checking and savings account products. So that wasn't as bad as I thought it was going to be. The dilution, I was really worried about because that was twice as high as it was last quarter. Turns out that they paid off a large percentage of their 2026 convertible notes. So that wasn't as bad as what I thought it was going to be. Let's see here. Tech platform was definitely a red sign. There's not too much around that.
Yeah. That was what I wanted to. That's what it stood out to me as the largest weakness, and it is a significant weakness because if SoFi, in my mind, is more than just a bank, and I think that it is. Galileo seems like it's an incredible suite of products. Technisys as well. It benefits, SoFi from buying it just from themselves, but if it's really going to be the AWS of fintech and really scale like we hope it would, that needs to play out. It may need some time, but it came in at 102 million this year, or not this year, this quarter versus 95 quarter two. Year over year, it's not even up too much. And they actually guided down for quarter four as well. So as far as tech platform, do you think that this breaks the thesis, or if not, what do you think like it'll take for you to say, hey, this is obviously not going to play out like we thought it would as an investor? Maybe it'll be a nice piece, but it's not going to add up.
Well, what's funny is like maybe the next video that I'm sort of writing on right now is the tech platform competitors. And it's funny, you look at all their competitors, and some of them are making legitimately as much or less revenue than Galileo, are
Mhm.
growing slower, 13% year over year, these sort of growth rates, and yet they're worth $4 billion
Yeah.
market cap. And Galileo's not getting that sort of feat, playing in the same space, same customer base, same everything. Um, and yet they don't get looked at as this, premium. I think the thing that's very interesting to me is guidance. So they said low to high teens of revenue growth. So you're expect like I understand. So the previous guidance was mid to high. So if you would have adjusted that to mid to low, I would have said, okay, you know what, they're performing worse than expected. But they kept the higher range there, which makes me think that potentially this is staying that way because some deals could close in Q4. And if they are that close to potentially doing the difference of 19% growth or 13% growth, like the growth is there. It's just a matter of when that key gets turned. So I don't think that it's a thesis breaker. I really do believe them whenever they say, "Hey, this is just delay, 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 delay," because this is a big decision for these companies.
So at what point, let's say we get all the way at the end of 2025, and the tech platform is still growing at the rate that it is right now, would you at that point say, okay, thesis breaker, or would you need more time?
No, well, uh, thesis breaker slightly in the way that it might not be the AWS of fintech. Um, Thesis breaker in terms of this means lower multiple for the stock. I don't know how many people are even valuing the tech platform into the stock as it is. What I think that people will then look at it as this is a great acquisition to lower internal costs. It'll grow at mid-teens, and that's perfectly fine. But the real grower here is financial services and lending,
Yeah.
which could be a slow grower. But if the marketplace is there for them to sell loans, it'll be a very fast grower, extremely high margin, and it doesn't matter what sector they're in.
And that's where I'm at with SoFi right now. Is I think that tech thesis will still play out, and over this next year. If it doesn't, then it's maybe just a nice leg of the overall thesis. It's not going to be the AWS of fintech in that case, but with the current valuation, even now after the run up from earnings, with that phenomenal outperformance, with where lending and financial services are going, like it's still a really nice opportunity. Even with that, you basically get the tech platform for free at this valuation. So
Yeah.
it's hard to complain
Yeah.
with that. It's if it was trading at $20, there'd be some risk certainly there because some premium would at least be assigned. Any final thoughts on SoFi, and then we're going to move on to one of these other two.
Um, in terms of final thoughts for SoFi, I don't think I have too many. I mean, yeah, everything looks like it's trucking along. I now finally understand how they're going to hit 80% in financial services. It was not clear, but they obviously were understanding a lot more than what I was seeing. And I'm excited to see what new products that they come out with to continue to bump up revenue per product. They said right now revenue per product is at $81 you know, per product. And they think that they can double that. So $162 per member because they have not been focusing on monetization and they can turn that around. Pretty interesting.
Yeah, it's really interesting to see what they've done. So I'm just going to throw up Alex Chris's post here on the results for SoFi, not SoFi, PayPal. We'll talk about PayPal next because it's weighted about the same. Now, PayPal, if I'm correct me if I'm wrong, you're just looking at this more of a trade rather than necessarily a long term that you want to hold forever. Is that still the case?
Yeah, I mean, that still holds up. But I'm willing to change if I think that they are resuming taking market share and stuff like that. I haven't really seen that too much. There is some exciting things that obviously we'll get into that do excite me for long term PayPal, but I still just think it's undervalued. And it's not quite giving me the excitement that a Robinhood or SoFi gives me quite. But
Yeah, these earnings were, I would actually say Robinhood's earnings were more exciting than PayPal's this quarter. PayPal actually kind of surprised me. Numbers, he has a lot of green dots here, but honestly, this one right here probably should be yellow. Revenue growth came in with a $90 million miss. It sounds like a lot. It's 0.5% as far as revenue. EPS actually beat. Guidance was revised up slightly. It was good numbers, not as amazing numbers as we've seen before, although free cash flow was certainly excellent. We won't touch on it here, but did you see where they bought? Well, I guess we will just briefly. Did you see where they bought back most of their shares?
no, I know that they bought 1.8 billion.
Yeah.
I didn't see the price.
Over 1 billion of that was when it was below 60 in that first month in quarter 3. I'll have a separate post on that at some point. Somebody else pointed that out. I hadn't gone through the SEC filings yet for the 10Q, but they showed it, and I'm like, dude, like that's amazing. So,
Yeah.
but that's not like the linchpin of the bull thesis. So obviously, this revenue miss was an issue. Did anything else stand out to you as far as like positively for PayPal or like negatively beyond the revenue miss? And then we'll talk about that revenue miss.
I mean, in terms of the overall numbers, it was, fine. I thought that the member account growth was doing fine. The monthly active users was exciting for me. Total payment, like I didn't have any problems with any of these statistics. I thought their actual financials came in fine, but just fine. Like I wasn't blown away by their revenue. And this is the thing that I'm always sort of questioning with PayPal, and what always just has this sort of disconnect is just how large PayPal branded checkout really is, because they can bring up these statistics talking about how, their attach rate for Venmo debit card or attach rate for pay with Venmo are just multiplying their earnings, or their new checkout experience is bringing in X number more higher conversion lift and everything like this. But then whenever it translates to like actual dollar basis, it's a lot lower than I always expect, because take rate just seemingly is continuously having a lot of strong competition, and the overall base of what they're doing, payments, is seeing just hard competition. So there were a lot of those sort of like me and you kind of call them like these Dan Schulman-esque like insights that I thought were really great this quarter. But in terms of the overall numbers, I thought that it was okay, just ticking along.
One thing that stood out to me beyond just the revenue piece that there was a negative was, they had this developer day on August. They launched Fastlane in August as well. So it's not at the very beginning of the quarter. It's kind of at the midway point. It can take a couple of weeks to actually implement. But Alex Chris said that they have over 1,000 merchants, and I was hoping it'd be substantially more that have onboarded to Fastlane. Did that throw up any red flags for you, or are you like, hey, it just takes time?
Yeah, I didn't look into that too much. Like they said, the partnerships that they're doing, they're all coming in 2025. So I didn't see too many red flags there. However, I did see some of the additional statistics that they brought with that, like the eligible customer profiles. 170 million in the US alone for Fastlane is a pretty good, uh, tryout base for 60% of the audience that they have sort of not been addressing so far. So I'm actually pretty excited. 1,000 merchants. Yeah, I think that that's probably normal. I'm excited for Fiserv, Adyen, global payments coming soon.
Yeah, and of course with the revenue miss, it's not good. There's no way to like say, "Hey, this isn't phenomenal." But if they missed on EPS as well, that might be a concern. They didn't, but they are having those conversations with their unbranded customers that they're taking a lower percent of their payment processing through Braintree in exchange for higher margins. Which overall, I think that that'll play out okay, especially as they continue to add value to Braintree, not just charge more, but they're trying to actually price the value. And so, some of these products like Fastlane, certainly the advertising platform as well, none of that really had time to factor into revenue at all. I don't know that we'll see much revenue from those either in quarter 4, but next year, I think that they'll, at least based on what happens over this quarter, be able to guide on that. And I'm really interested to see where that's going. So basically, they're still growing and they're still undervalued, even without those being considered at all. And I think that those have a long way to run. All right. So here's the buybacks. And yeah, you'll love this, that the number of shares purchased and the amount that they actually used July 1st to July 31st, right there under $60 was the lion's
Wow.
share. So it just, as they rode up, they bought back less and less. And, they're ahead of schedule as far as buyback. So I think Alex, Chris, and whoever is in charge of pulling that trigger on the buybacks were like, hey, we're coming out with a lot of good stuff and good news. Let's hit the buyback button, hit that PayPal button on the buyback. So that was just a fun little extra. Oops, there. Let's talk. Well, actually, any final thoughts on PayPal, and then we'll talk Robinhood.
Yeah, I just I think everything just goes back to what I said with those, because of the new checkout experience. They said, oh, we're seeing a 15 to 20% increase in buy now, pay later. Like these things just like, get my heart pumping. I get very excited whenever they're talking about all these statistics. And then you look at PayPal's total take rates, total take rate and transactional take rate, and they just continue to fall. And now we're seeing this quarter new lows on both of those statistics. And it's just like, I don't know. The one thing that I really like about PayPal, and I think in the short term will do very well, is these sort of Braintree-esque switches from growth to value is going to attract that same style of investor. So there's going to be more PayPal investors that see the transaction margin dollars, the profitability, the buybacks, and they're going to pump this stock over $100 a share. At that point, it's not the type of stock that I see that gives me the same feelings that a Robinhood and SoFi do. Now, I could be wrong. Like they could turn things around, but a lot of that's going to have to come from value-added services and these sort of things that obviously need to be implemented much, much faster. Like a potential debit card. Like this could become a fully fledged financial services platform, but like they said, they've got 5% take rate in their cards and 8% take rate in Pay with Venmo. It's just tiny numbers at this point.
And here is just one of those parts of a slide just that shows some of these numbers. So they have, of course, their Pay with it Pay Everywhere program, and it shows a 5x increase in total Omni spending within the first 2 weeks of sign up. That's early, so that may not continue, or it might. We don't know. Of course, their debit cards are scaling. Pay with Venmo is, of course, yielding some good results. But the hard thing about this quarter is so much of this was launched like in the middle of this quarter, late this quarter, and it takes time to scale. So we really won't have a really good read other than just like that first little bit of information as far as how it can impact PayPal in the long term. It's going to take time, maybe a little bit more time than I was thinking as far as scaling these first look products coming into 2025. But I'm hopeful that they'll guide on that this next quarter. I think it's going to be a very strong long-term play. But they, as far as like they're basically the incumbent, they're the leader, they're the orthodoxy here. They're disrupting some of the older line payments platform systems, but not quite in the same way as SoFi and Robinhood as far as up and coming. So let's talk Robinhood. Robinhood. So PayPal had a miss on revenue, but they had a double beat outside of that. And Robinhood had a double miss. They don't do guidance. So miss on revenue, miss on EPS. Thesis is broken, right? It's over, run for the hills. What do you think?
Yeah, Thesis is dead. We hate this stock now. No, I'm
Vlad
kidding.
scammed us.
Yeah. I actually talked to him after earnings, and he said, hey, I mean, this was where we thought it was going to be. We don't think that people were sort of adjusting for contra revenue or a regulatory accrual. And if you do adjust for those, we beat.
Yeah.
And so I think, well, not beat actually on EPS, he would have met, but yeah, things I think are still ticking along. I think that people got used to faster and faster growth rates, and just like other stocks, they can then project higher and higher numbers, and it can get away from us. Robinhood's long-term deposit growth rate that they want to hit is 20%. Okay. But now, whenever we see quarters that do get even remotely near 20%, we're like, oh no, they're dying, because we've seen 40+%, right? And that's
Yeah,
much better.
honestly, like if it was, its expectations were off, and my own were too. I had this very detailed, actually, out of all the three companies, the most detailed in Robinhood as far as what I thought each segment would do. And for the most, I had some misses. One of those was crypto, and that was probably one of the two bigger weaknesses on the quarter. I'll throw this up here just so people can see it. Basically, I was expecting that crypto would come in relatively even with August and July, but instead we see that notional volumes were down substantially. And what this ended up doing, of course, was tanking their overall revenue. The crypto right here was off by about 20 million from the prior quarter. I thought that that would come roughly in line. So we had that, and I don't think. Yeah, I don't have that. Oh, here's the contra revenue. So contra revenue. What is contra revenue, Tanner?
You're essentially not writing in your regular revenue for the cost of acquiring the deposits or paying for the match transfer bonuses.
And so in my model, in Amit's as well, and you might have been the lone person that actually looked into it. I wasn't, thinking about this at all. I didn't know how that they were amortizing the matches, but this actually breaks it out quite nicely. So you can see here it went from 13 million negative to 27 million, and a lot of that was through that gold boost. It started in June 2024. They paid out 11 million, which was 10 million was this quarter. They're winding that down in November. And just simply because Vlad had comments on this, which I appreciated the color on, they haven't seen the ROI on this program. They're just basically spending money. They're not getting what they thought would happen in return. The other matching seems like it's working for them, but this is very helpful to kind of know what's going on. And I know it caused the miss, but when I heard Vlad say, and I actually saw this note here that they were winding this down in November, I was actually pumping my fist. And the reason why is I was like, okay, this is great. Robinhood has this reputation by some that they're just throwing money, and they have 5 billion of it. So why not? They're just throwing money into a void. And whether it has a good ROI or not, they're just going to do that because they want to accelerate at all costs. That's not the case, because this shows it right here that they said, hey, we're spending money here. We're obligated to do this for a little while just because we've advertised that. But we're going to cut that in November just because it doesn't have the ROI there versus the other vehicles they're using and the levers that they're pulling for growth. Those are clearly working, and so they're sticking with it. And make no mistake, like 38% year over year revenue growth is phenomenal. Like if you told me at the end of last year, like, hey, third quarter, they're going to hit that, I'll be like, yeah, all right, this is great. Versus like the market reaction was dump this stock. It's terrible. So did anything whether it's a contra revenue or anything else from Vlad's comments, the EPS and revenue miss, stand out to you negatively or positively beyond what we've talked about for Robinhood?
I mean, gold subscribers was interesting. They obviously continued to grow. They're now at like a 9% attach rate, or 2.2 million gold users. Maybe one day.
Be a lot of users.
Yeah, 2.2 million gold users. They think that they can get that up to 50% of members up on gold. But I would like to see it have sort of a faster approach. I'm pretty blown away that the attach rate's not higher, considering the change in, cash sweep like bonuses and everything that you're going to get, and the transfer bonuses. Like, it just seems like brain dead to not use gold. But for some reason, they still don't see a high enough attach rate. They said that their new cohorts are potentially coming in at like 20%. They said that a couple quarters ago. I wonder if that's still holding up today. I asked Vlad about it. He didn't. He gave me like a non-answer. So, yeah.
Yeah, I think that that'll really bump up as they get the credit card out to people, because you have to be a gold member for the gold card. And, I expect that they're probably right now targeting those that are gold members first. I don't have 100% confirmation on that, but at least I think everybody, except for one guy that I asked, said that they already were a gold member when they got the card. So, so, once they hit that full run rate, and they did talk about that, I think they're at 100,000, and there's, I believe, 2 million on the wait list. That's going to be a lot of new gold members. So, but it'll take time to play out. Any final thoughts?
I legitimately think it'll take like a very long time.
Oh yeah, years.
Yeah, like whenever I was first talking to Vlad, he was like, "Oh, you know what? This part's going to be pretty easy to understand. We understand this. A lot of the cost is really on customer acquisition, and we've tackled that." And now talking on the earnings call, he seems much more cautious. And credit cards can hurt. Okay, they can hurt a lot. They can be good, but you really have to understand it and slowly get in. I think they're starting to just get the first aspects of potentially things not going the way that they've wanted. And I think that they're getting spooked a little bit. And so we might actually see a slowing in credit card rollouts. And that's going to make people upset, but really, it shouldn't, because they're still rolling them out and people are getting access to credit from Robinhood. And that wasn't a product before.
Yeah, that was one of those areas too that surprised me a little bit. And I've again not yet looked at the SEC filings, but the credit cards went from 6 million, which that's a small amount anyway, down to 4 million this quarter. And I figured it'd go the other way, from 6 million to 8 million, because it's a little bit early even for charge offs at this point. So
I think
it'll be
they're
interesting.
writing off. I think they're writing off all the X1 people.
Yeah, that could be the case. So I'll have to look into that a little bit more. But yeah, it'll take a little time to play out. But yeah, it's nothing really shifted on the Robinhood thesis for me. I'm still excited to be long. Anything change for you, or is it about the same thesis for you?
Same. Haven't even bought the dip, however, so maybe that's a change in thesis. But I'm going to see what the market does in terms of, if they want to continue to sell it off or get closer to $20. I'd love to buy some there. Um, but yeah, no, I think things are still trucking along. Though the one thing that I've always struggled with Robinhood as well is they talk about this thing of benefiting greatly in both macro environments. So when rates are low, they do great on transaction. When rates are high, they do great on net interest. And then they showed a I think a slide on this. If you have it, please bring it up. But I'll try looking it up. It's super important to watch. Because I'm just going to call their bluff here a little bit. Because I don't think they're telling the most truth.
Yeah, and interest actually fell a little bit too. That was one of those. That was a slight surprise. I thought it would be close to the same, maybe even slightly increase, since rates weren't cut until September 30th. But there was going to be a very slight impact. Yeah, this one's, by the way, it's a 45 slide earnings presentation, so they're giving us more information, which is really nice and handy. Let's
It
see
might
if
even be here. Wait, I'm going to go to the investor presentation because they have it there. I know that for sure. So this is from Q2, but what I'm trying to show off is historical data anyway. Do you see this right here?
Yeah,
So they talk about how they're hedged naturally through market cycles. But if you actually look, you can see how the spread has changed back and forth and back and forth. And this is their sort of benefit, right? But if you actually look at the earnings in 2021 to 2022, they dropped significantly. This is not hedged. They went from 1.8 billion down to 1.3 billion, then back to 1.8 billion. So that's not what I would call hedged. But so I think people can also be worried about that switch or that transition. So yeah, you'll do better on the opposite side of both of those markets, but you're not going to do potentially well during that transfer. I think that that's what people are worried about as well. But overall, I really liked what they did. Gold subscribers look good. Retirement accounts just still trucking along. Transfer bonuses, they said contra revenue is going to grow in Q4 about the same pace of what they did the quarter before, which was 14 million. So you're looking at what, $41 million of contra revenue coming in Q4.
yeah.
It's a lot.
It is, yeah. They'll still be EPS profitable. They're still growing a lot. There's a cost to that, and the gold revenue, the gold matching that they're doing, that is just the nice thing is that hits quarter 4 and then it's done. It's not spread out over the 4 or 5 years like the current matching bonuses that they have. But yeah, quarter 4 it may come in softer than expectations simply because of that. Although they were pretty clear on the contra revenue, it's just a question of if analysts actually caught that or not. So, any last thoughts, Tanner? And we will wrap up.
Yeah, I just have to talk a little bit more about the matching and everything. They did talk about payback periods. So essentially, 1% is 1 year. So If they matched your transfer by 1%, they're going to take a year to get that back. If they match you by 3% for retirement, it may be closer to 2 or even 3 years for that. Um, the great thing about this, and what Vlad continues to harp on, is the more products that people have, not only do they see revenue from each individual product, but each individual product sees a boost the more products that they actually have. So larger wallet share. And that's all they're trying to do, right? This is what futures are for. This is what index options are for. This is what Legends is for. It's just how many different areas do investors want to be in, and how can we answer all of those and increase the wealth across the entire board, right?
That's
If
what,
by adding features you get more crypto revenue, how exciting is that? You know?
yep. And that's what election betting's for too. So
Exactly. Yeah, we didn't even quite get into that. So I
yeah.
think event contracts will be huge.
Oh
And it
yeah.
seems that Robinhood wants to be anywhere that people are making money. Like, why would you go to Kalshi? I think is how you say it.
Yeah.
This they have supposedly a better spread on their election betting, but you have to transfer in, and that can take a very long time. And then, getting close to this date, you might not have a lot of time to trade before elections. So with uh, Robinhood's, you absolutely can, because that's where your money already is. So it makes sense that your brokerage would have these sort of tools, and it also makes sense for Robinhood. Don't expect anything like this from SoFi.
Yeah, yeah, it fits their ecosystem quite well, their reputation. They're not running from it. I was a little curious on that too, because it seemed like they kind of were with the retirement push that they were doing. But no, they're like, hey, we know that DGens also use our platform, so here's a product just for them. So although I'm, legitimate people too, like are interested in betting on the election. Like I've seen a lot of that from people that I didn't think would typically and traditionally gamble. So it'll be interesting to see where that goes. That feels like a proof of concept for me, but I think that we'll see more of those event contracts. And yeah, that's the nice thing about Robinhood this year versus Robinhood like 2 years ago is they do have a diversified product stream, that they're not just making their income from a couple of different things, but they have, I believe, 7 different products that have 100 million or more run rate throughout the year, or 7 different vectors. But several of them are related together. But that flywheel does seem like it'll continue to help expand that ecosystem. So yeah, I like being along here. I actually have some cash secured puts at 25. I think I'll get caught with them, but that was with money that I made from Robinhood earlier in the year. So I'm like, hey, I don't mind right there, even though those will be a little bit initially underwater. Holding this for 5 years, I don't think I'll be underwater for long. So
Sure. Can I ask you, do you think that election betting is going to be material to their Q4 earnings?
no, they did talk about. I think on the first day they had like 10 million contracts signed, and maybe that's it's hard for me to say like if it's going to be like that's the peak just because people wanted to get in when they could, or if like Monday is going to be the peak or Tuesday even. And it's of course going to be harder to get out of those contracts. I think that's one thing that maybe people don't realize is that this won't actually be settled until January, when Congress officially confirms the election. I think that's January 6th. But no,
Hmm.
I don't think it'll be material. It'll be maybe like if things go well, they'll have an extra $1 million that they put in there. Like that's great. But that's even smaller than credit cards. So, but every little thing adds up. And the biggest thing is it looks like this is going to be very successful. And so seeing future events contracts like who is going to win the Super Bowl, when it's a binary type of option, I think that that's all but guaranteed at this point. So, and of course, all full suite maybe of Kalshi won't come at least right away, but like these most commonly betted, binary positions, I think that's what they're going to roll out.
I'm going to predict that they're going to make 5 to 6 million on this product in this
Wow.
quarter, just on
Wow.
this election. I think they've already made more than 1 million. So they said they did. Was it 10 million contracts or something like this?
Yeah. That's
And then the
100,000.
next, they said in the earnings call, go back. They said we haven't rolled out to broad market yet, and we've already doubled today. So it didn't even go broad market, and they were doing 20 million. Okay.
Okay. I could be wrong.
And
But
then what I think is going to happen is Kalshi or whatever is still going to do the bulk of this
Yeah.
earnings, but then they're going to start. They're already putting up warnings and saying, "Hey, our backlog is so big, your uh, you know deposits are probably not going to be in time." And then there's going to be a massive flood to get to Robinhood
Oh yeah.
because they will take your money because it's already there.
Absolutely, they start, and I don't know if Kalshi is the same way. I've not used that platform before, but 23.75 hours per week, starting on Sunday, or per day rather, is going to be the trading, and so people can do that around the clock. 15 minutes downtime, I guess, just to make sure everything's working on that end as far as servers and everything. But yeah, no, that would be amazing if it actually comes down even higher than credit card revenue. I don't
Do
expect
you
that,
have
but
an opinion? Oh, sorry.
An opinion on who to vote for? I skip.
Just because everything is going more 24-hour markets, so
Oh yeah,
Robinhood will then be able to get into futures, elections betting, all these things that are more around the clock, and equities. Like we're seeing New York Stock Exchange now open to 22-hour markets. I asked Vlad this. I said, does this triple volume or does this just spread out the existing volume? So he said he thinks there will be incremental volume, obviously, but he
yeah.
doesn't know to what degree.
I would think that it would add volume just because if the New York Stock Exchange is doing it, it adds some legitimacy and some level of comfort with that, and also a little bit of liquidity too. So right now, 24-hour markets are very, very illiquid, with a few exceptions, and so yeah, more volume, even if it's through other platforms, I think is good. I think between that and like T1 settlement time, which eventually will be T0, like we're going to continue to see more higher and higher volumes, which only benefits brokers.
Is
So
this not the greatest bull case for these stocks than
yes,
any other case? Like you just took your total time trading from 8 hours to 22 or 24 hours. It's like, this is mind blowing to me.
yeah, no,
Like if they see
that's a huge
liquidity,
like even Schwab
you
is
know,
probably like, hey, this is awesome. It's going to save our skin. I mean, they're okay, but uh,
Schwab just rolled out 24-hour trading.
yep. Robinhood launches and leads, and others are like, "Hey, that's a good idea. We got to do that to keep up." So time and time
Yeah.
again, and that's why I love and I've switched over to investing in this company rather than just seeing it as a trade. There is cyclicality. There is going to be some weakness over the next year versus this year. It was just strength after strength for Robinhood. But long term, like a lot of tailwinds behind Robinhood, demographic shifts, even trading mentalities as well. And one of those good reminders, I think it was in the earnings call, but it might have been commentary afterwards, is that when Robinhood initially launched, at least among retail investors, options were pretty scarce. Like people usually shied away from options. And Robinhood broke that open to a whole new market, and of course, lead that, and it's very, very lucrative for them. And so, I'm curious, as far as futures, as far as different future projects as well, not pun intended there, what that'll do for Robinhood. Like if they open up that can of worms where people are like, hey, I really like this product, I'm going to go for this. That's a whole new TAM for them. So,
Yeah. No, I 100% agree. I think that's very interesting. And even as credit cards roll out, they said they're top of wallet every time because it's 3% cash back. So
oh, yeah.
it'll be very interesting to see how that scales over time.
Yeah, it'll be interesting to finally get my hands on one of those. Maybe we'll see.
Yeah. Yeah.
Anyway, with that, let's go ahead and wrap up. Thank you so much for being my guest. Thank you all for tuning in and watching. We'll have Tannor back on sometime in the future. And until next time, happy investing.
Thanks, everyone.